This is like the third video I record, and the first two they didn't come really out well, and this is the third one I'm recording, and bear with me if I don't sound enthusiastic about these videos. But anyway, this is for my help also. It's going to help me, and yeah, I need these videos also. That's why I'm uploading these videos. They help me keep track of my progress and the skills. So this is part 2 of the intraday strategy. Not really part 2, but whatever part it is, we are learning this intraday strategy together, right? And what we're going to do is we're going to try to find out what happened here. What sense can we make of this day? And actually, I had even though this is a demo account, I had taken some trades. Let me just show you the trade history, and this is what happened, right? This is what happened. Well, I had a late entry here and joined the market going down. After that, just when the market hit its turning point, I joined also and went up until here. Anyway, we're going to learn how we can get these entries. And yeah, let me just wipe off this trade history thing, and then we can get onto it, right? So what you're going to need is basically this these dotted lines here. These dotted lines, let me just show you with the pointer. This dotted line here and then this dotted line here. What are these lines? These are called period separators. And how do you add them? Just go to settings, click that cog wheel, and then go to show period separators. Check it. If you need them on, check it on. If you don't, just let it. But we're going to need them on, right? This time, right? Need them on. Anyway, let's go. What's happening to the chart now, eh? Anyway, anyway, there we go. Chart is okay. Now, so what we do is, I have devised a way. So what we do is, we have to draw certain support lines and resistance lines on our charts before we go to identify the intraday open, right? Before we identify the intraday open. So what you can do is just click your chart again, go to settings, and what you can do is go to line type and then just select line chart. And what you can do is we are going to identify well, what you do is, okay, the right thing to do is okay, I'm thinking about a lot of things at the same time, but what you should do is look at where price is, and try to put your lines where at resistance areas where price is. That's the first one. Let me just show you how I got that one. So support and resistances are basically turning points, like this first one here. I could go for this one, could go for this one, for this one, for this one, for that one, for this one, for that one, whatever, right? Let's just mark all of them. We are making this as simple as we can, right? We're going to mark here, right? And then we're going to mark here. There's a way we're going to sieve this out. We're going to like erase the ones we don't want, the obsolete ones, and obsolete as in the ones we're not going to use after a certain step. So let me just finish with marking them. So let me just, maybe this one here, and it's going to be a pain in the ass trying to delete these. I know. Anyway, now that we have marked our resistance lines, so mind you, this would be before the market pans out on the second day, right? And just as the time goes to midnight or whatever your broker says goes to your intraday, you would bring back the candlesticks, right? And then what you should do is you're going to do a couple of things. Now we have okay, our our resistance points are not going to be every resistance point out there, right? So we saw that the resistance point was here, right? And then other parts here. Now we have one specific resistance that we really prefer over the others. It's a resistance where we find a bullish and a bearish candle having relatively the same open or the same close, right? Let's say where a bullish candle opened, no, where a bullish candle closed, and a bearish candle will open, and they would relatively be the same size, sort of like bearish haramis or bearish engulfing candles, whatever, right? So now I bet you can identify one. This would be this one here. You can see that these are relatively the same size, and somewhere here also these are relatively the same size. Or we can just come here also, these two here are relatively the same size, right? So we're going to consider those only. Now I'm going to delete the extra lines, because now they're no longer important. We've identified our preferred area. So as you can see, it creates sort of a zone. That's beautiful. Now what you do is, now that you have your zone and you can see it's really above, which means these zones are usually a magnet to the market, and let's see how it's going to be attracted. So now it's a new day. You just woke up. You not really woke up. You just you did wake up, but then now you've identified your support and resistances. Now you want to identify your intraday candle. Your intraday candle is the wait, yeah, just a mistake there. Yeah. So what you did is you need to identify your first intraday candle, which is the candle of the first candle on the dotted line, which is this bullish candle here. Now what you have to do is you have to identify the open of the candle. So the bullish candle opens at the bottom while the bearish candle opens at the top, right? So now this is a mouthful, but bear with me. The strategy says if the market goes above the intraday line here, then we're going to look for sell setups. Just near the zone that we marked. Importantly, the zone that we marked. And yeah, what happens is the market usually is going to respect this zone here. It might take some liquidity like it did here. That's where your stop loss works. You put your stop loss just a little bit above the zone so that you don't get stopped out, and you enter your sell trade. That's where you enter your sell trade. um if it were okay, let me just finish here. That's the sell trade you would enter after your zone was entered, right? So the trick here is make sure that as soon as your zone is filled or poked, enter your sell trade. As soon as possible. Don't wait, because the market might go without you, or wait for a retest. Like somewhere here, this part here, there was a retest there. You could have entered there again. Anyway, we can see that the market gave us a strong move downwards, and our strategy was respected. So once again, if the market goes above the intraday line, it means you're going to look for sells. Where are you going to look for sells? In that certain zone that you had marked, right? And mind you, the market might infiltrate the zone, it might poke the zone, and that's where you get your entry, and then you ride the market down. Now this strategy is two parts. The market is going to move in your direction, and what should you target? Your target is going to be, let me just use a higher time frame to show you because my screen is too small to show you this. Let's go to 20 minutes. Now it's still the same chart, and it's still the same market. We entered our sell here. Now we need to find a target. What you should know is usually this movement is going to break the intraday to the downside. If it were going up, it would also break the intraday going up, right? Anyway, your target is going to be a certain order block. It's always going to be an order block, right? So you start with an entry from the zone and then target an order block. Where are you going to find the order block? Always look for the order block. Always look for the order block in the past, not the furthest past, but the past. Okay, let me just show you. You're going to look for an order block here in the past. You get it? It's with a neck. So we're going downwards, right? We're going to identify a certain order block. Is this the order block? Is this the order block? We are yet to identify it, right? This is not a video for teaching you what an order block is, but this, for people who know SMC, this would be the proper order block. This one would not be an order block because it's an order block that had been mitigated. What am I saying? So this is the original order block that was not mitigated, right? So this one would not be respected because there was an order block below here. And what you can also use is look here. Look here, there are those two candle formations that we talked about here. Just add that order block there, the two candle formations that we mentioned, which are, let me just go to 15 minutes, and if you look here, this is the candle formation that we talked about, where there's a bullish candle and a bearish candle that are roughly the same size, and yeah, that's where the entry is going to be. That's where the entry is going to, that's the target, and it's usually in the form of an order block, right? Now, like we said, let's go see what happened. Let's just go a time frame higher so that you see it better. Indeed, the order block was touched and the market went up. The market shot up, and as you can see, it doesn't really take a long time for the market to go back up. It's a really potent strategy. And even though I said a mouthful, hopefully you guys got the essence of it. And now, what would you target after the order block? This time it's really up to you. You could just target the intraday, you could target the last resistance, but it's entirely up to you. This is where your risk appetite comes in. Yeah, anyway, enjoy.